The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we kicked off a very busy week ahead on Monday, we found a little bit of green in grains and oil seeds. I would call it firm when it was all said and done. We were off session highs in beans in particular. Livestock trade, a little bit of pressure there. Of course, we got a lot in front of us this week. Elections, Fed meeting, a WASDE report on Friday, and more. So let's talk about it. Joining us now for market analysis as we recap Monday's trade, John Heimberg with Total Farm Marketing. John, good to catch up with you. Hope you had a good weekend. I know we both were not too happy with the Green Bay Packers on Sunday. And looking at the markets on Monday, I mean, I guess it wasn't as bad as the Packers loss. I'll put it that way. But still, just a lot of moving around. And I think a lot of nervousness in these markets ahead of what's going to be a pivotal week, John.
Yeah, don't forget about that excellence the Badgers put out there against Hawkeyes this weekend as well. So pretty rough football weekend in Wisconsin. Plus it was rainy and dreary. Made it a great time. Anyway, with that, let's get serious here. Yeah, you also forgot one other thing. We got the USDA baseline projections coming out on Thursday. So we got those for the next decade to kind of ponder through here too. So yeah, very interesting day in the markets. Obviously, the big front end news is the election. What's going to be happening with that? So really, a lot of things we could be talking about today in the next 48 hours could be totally a different feeling. So that just brings a lot of volatility into the marketplace. And I think you're starting to look at some positions that needed to short cover, clean up some of that area. But, I think that was a factor on the livestock side today. In the grain markets, prices start rallying. We still got bushels that need to move. And, I think that quickly puts a lid on top of things here as there's just quite a bit of bushels still out there in producers' hands. And now that we're kind of done with harvest, we'll see where they start moving, what's going to be how the market handles this. Obviously, producers are feeling behind the eight ball in terms of finance to lock up some vendors and get the market to pay them. So there's just a lot of little moving parts right now. Throw in there some seasonal windows in corn that aren't exactly friendly, and we can touch on them in a bit. But just at least today, it was kind of a disappointing day to see a market that looked like it wanted to do something this morning just really kind of give up the morning strength and just kind of closed.
You mentioned bushels that got to move, and I know we were talking about this before you went on the air, but to that end, I mean, we've been watching basis spreads, things like that here over the last several weeks as we're wrapping up harvest, but there are some locations where they are full and we still have bushels that have to move. And you mentioned to me that could be a key factor here as well. Talk about that, John.
Yeah, it's region by region. There's a lot of different stories that are out there. I've got some regions where processors are aggressively looking to lock in corn because guys aren't selling it. You're seeing a little bit of a basis bump. And then I got other regions where the basis continues to tumble and the elevator is basically telling guys, we have no more room until we get some trains here or we get some movement or get some things out. You just got to sit on things. So that's a big factor, I think, this marketplace. Now, one of the biggest driving factors in a lot of how grain is flowing is the Mississippi River. What's happening at the Gulf. We've seen a very friendly basis in terms of what they're offering to get bushels down to the Gulf. Now, this rainfall that's coming through is forecasted to lift those Mississippi River levels up at Memphis above restricted level probably next week. So we'll get those barges moving full bore down to the Gulf. Now, that's a two-way street there. Number one, it's going to get lower export prices, maybe keep that demand moving that we need to see because that basis comes down. But at the same time, if the pipeline gets full, that'll get reflected all the way back into the grain country. But there is a plus to that river getting full that nobody really ever talks about. Typically when a barge goes down, it doesn't come back empty. It's bringing fertilizer back up. So that could possibly help out some of these fertilizer prices that we're seeing, as long as we get some good movement on the river. So those are some things to watch as we move into later November. Big thing for me, though, in the corn market, we just saw this happen in the soybean side with the first notice day of the November bean contracts. We sold off those 3 or 4 days prior. We've bounced off that window now a little bit here. Corn first notice day for December is going to be right in the middle of Thanksgiving. First notice day is the 29th, Thanksgiving's the 28th. So probably basis contracts or any bushels that are stored that need to be priced or moved need to be done probably by the 26th or the 27th. That typically can be a pressured window in terms of the corn market. So with that, I'm kind of still at least staying on the defensive here in this regard, or locking in some bushels if guys got it. I still think March puts are relatively cheap if you're going to hold bushels out into the spring. In fact, I even did a little bit of work with some December puts today, just to kind of keep a little bit of a floor under the market here in the front order in case we get some real chaos with the election, the USDA report, and all those pieces that are coming at us here this week.
Looking at this corn market in particular, I know we've gotten through the 100-day moving average, but we're having a little trouble getting past that. I mean, you look at these charts, corn to start, what big things are standing out to you right now?
Again, we're running into some pretty good resistance, trend line resistance over December. That 420 level really is a kind of a swing point. You can see that on charts on the continuous side. Maybe it's kind of one of those spots, either we're through 420 going to 450 or not through 420 headed to 380. So I'm kind of watching that area. We failed there again today. It's just kind of a spot that it just seemed to have some stickiness on top of it, and the sellers seem to kick in. So we'll have to see how that plays out. I mean, we're sitting on a pretty big long-term trend line in terms of some support. About a nickel below it opens us up to the floor. If we get through 420, maybe we throw another dime into it, that type of thing. So, to me, I think we're building a bit of a range here. 430 to 390 is a possibility, but I think we may have to go down to that 390 point first to establish the bottom of the range. So, so I'm watching that on the charts. Now, we did kind of close at least, one of our better close in about a week or so here today. We'll see if we can get some follow through. But I just didn't like the price action, especially the deferred contracts today, barely holding on to gains. At least December corn held those couple pennies in there. But it just feels like we're not going to get a whole lot anywhere until we have to get through this week in terms of the numbers and obviously the geopolitical events.
How about soybeans? I feel like Nove beans, again, $10 is going to be that pivotal swing point on the charts and that psychological point too. Would you agree, John?
Yeah, we got a little bit of a double top with today's price action, kind of just matching up or a little bit short of Friday's highs and obviously fading off of that. That's 2 days in a row. We got up to that 990 level and it just seemed like we ran out of gas. So the market might be shifting energy a little bit more watching January in the $10 level. Again, we failed to get up through there today on the close. We'll have to see what tomorrow gives us. The two sides. First one I'm watching, export demand is good, but still, one of the third or fourth worst best sales in the last 10 years. We've seen bean business, but it's still not enough to really push the needle. Export inspections today were solid, a little over 2 million metric tons. But if you look at the chart, we've hit our seasonal peak, at least at this time frame. If we continue to see that line come down, that's lower than last week, which was lower than the week before, if you know what I mean by the seasonal peak. Could that be a concerning point here that we don't get these beans shipped? Obviously, you still can't disregard what's going on in South America. Where, just a month ago, we were worried they weren't going to get the beans in. Planting was late. Where was the moisture? Moisture seems to be ample. Throughout the day, Mato Grosso is almost 80% planted, which is actually above last year's pace and the 5-year average. So much for the planting delays. Because again, the technology is out there. We see it here in the United States, and we're a little behind. We can get caught up in a really big hurry. So those are things that are still weighing. I think it's just going to be real hard for beans to go too much higher here just because of the prospects of that South American supply being out there. And with the amount of purchases that seem to be front loaded a little bit because of the election, maybe that demand window closes here fairly quickly. So that's something that's on my radar.
How about those wheat markets too? I felt like they've been very range bound, maybe waiting more so on what news may or may not come out of Russia with export restrictions and things of that nature. Any big notes for you in the wheat trade, John?
No, I just saw the state of Kansas looking pretty green on the radar today in terms of a lot of moisture coming down. I know last week's crop ratings were pretty poor. Probably not going to see a whole lot of improvement because the rain was later in the week, but we'll see how those ratings come out here this afternoon. I believe in the crop progress numbers. Maybe that's why I saw a couple upticks, at least in the hard red winter wheat market today, just some squaring up before that report came out. To me, the charts still look a little bit anxious, like we're ready to break and move to the downside if we do get some negative news. So I'm cautious there in the wheat market. Obviously, you're correct. The global prices still are driven by the Russian wheat market and how they handle their bushels and what's happening on the export trade. Now, we did see a nice little reverse out in the dollar, at least today. Now, again, probably tied a little bit more to position scoring going into the election than anything. So we'll have to see. But I think these rains are going to be beneficial. Looks like we're going to stay extremely wet in the southern plains well into next week. So that should build some good moisture up in the soil to help that winter wheat crop out, which obviously won't be friendly to prices if that comes through.
John Heinberg with Total Farm Marketing is our guest analyst here today on the show. John, let's go to livestock trade. Let's start in the hogs. Finally ended up with a day where we didn't set new contract highs in lean hog futures. This market's been on fire, though, as of late. Your thoughts with what we're seeing in the hog trade right now?
Yeah, hog market, a little bit of profit taking. Again, they've really stretched this long position in a very big hurry. In terms of the hog side, and when I say they manage money positions, they've really poured into the hog market. Obviously, we haven't seen much of a correction since that little dip in August, and this market's probably due to take a little money off the table. We put a little bit of a hook reversal in Friday, got a little follow through today. And there is still a gap on the December chart down at 1882.5 or 8082.5, excuse me. So maybe we go back, let's fill that gap, and then from there we'll see where we are. Now, the fundamentals have been still very good. We had over $100 carcasses last week. Cash index is up to 88.50, so it's $5 ahead of the December contract. So I'm looking at some things that are still very friendly to this market here. As long as that cash index continues to lift, that's going to keep some buying into that December contract. But again, like I said, the market's got a little long in the tooth here. It might be a spot we see a little correction before we settle back in. Wouldn't surprise me. We go back down, challenge that $80 handle, maybe fill that gap.
Now, flip side of the cattle trade, John, I know it was kind of a tough week last week, and there's still been some concern in this cattle market. We've talked about this. What are your thoughts here pre-election? To your point earlier, I mean, the next 24, 48 hours could change a lot, and stock market sentiment could weigh into cattle, things like that. So, I mean, what's your perspective in the cattle trade right now?
Yeah, looking at the cattle market, obviously, first off, technically, we got a couple different variables. Number one, December contract did put a reversal on the weekly side. Okay, typically that's a little bit more of a trend turn in terms of the marketplace, but we did put a reversal on Friday to the upside on the daily chart. So it's going to be interesting to see. So that kind of tells me maybe we get ourselves a little bit range bound, at least as we get through things here. But fundamentals have kind of tumbled a little bit here in the last week. We lost $5 on choice carcasses, $10 on select last week. Cash trade did dip, steady to $1 lower. Plus on top of that, it's another market that the money has really moved into going into this week of volatility. So we'll see how they handle things. Again, I think today was a little bit more position squaring, really consolidating within Friday's range. Retail values got a little bid today that probably pulled the cattle market off its lows. So it's going to be a choppy week. I'm still been cautiously defensive. I'm sitting on those positions. I want to get through this week because I still like the long term, with the fundamentals that are out there in terms of cattle numbers, what we saw in the last cattle on feed report. But also I'm starting to look at some feeder prices back at the 240 level and back in the spring months that might start looking like pretty good values. And same thing on the live cattle side. If we do get much of a break, I'm probably going to spin myself to a little bit more offensive, but that'll be for the spring, summer of 2025.
How about the dairy trade, John? Any big notes for you as you take a look over at the dairy parlor here this week?
Yeah, unfortunately, we were sitting at a spot where I thought this market could hold or continue to tumble. Cheese prices came in softer today, 0.75 cents lower. Not a whole lot of movement there. But with that, the cash market, or excuse me, the milk market did at least break through those recent consolidation patterns. A little more nervous that we got a better chance to go down and test the $19 handle or the upper 18s on some of these deferred contracts than we do getting some kick in here until we start seeing the cheese market kind of stabilize. Now, holiday demand should start picking up here pretty aggressively, but it just kind of comes down to the supply of milk, supply of cheese that's out there. And the price trend right now, at least in terms of those factors, is still staying on the defensive side.
John, good stuff as always. Anything final you want to share or reiterate with folks as we wrap up today's program and thinking about a very busy week ahead?
Yeah, I get the question. I'm getting it for about 3 weeks now. What's the election going to do? What's the election going to do? Well, here's how you answer that for yourself. You look at your operation, look at what you got in terms of animals on the hoof or cattle on feed or grain in the bin, whatever it is. Just say, where's my biggest risk? And just protect yourself going into this week. Again, we're going to get a lot of numbers dumped at us in a pretty big hurry here in terms of, USDA numbers at the end of the week, election volatility at the front of the week. I'd rather be wrong with puts and protect myself first and let the market run higher, knowing I've got the supplies, because producers are plenty long in terms of whatever they have in terms of inventory.
Good things to think about. John, if folks want to reach out, have a conversation with you there at Total Farm Marketing, how can they get in touch with you?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Always good to chat with you, John Heinberg from Total Farm Marketing. Thanks for being with us here on Market Talk today. We appreciate it.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.